Owning a home is a significant financial goal for many Americans. Homeownership is often seen as a symbol of stability, independence, and accomplishment. It's also a long-term investment that can provide a sense of security and pride, as well as potential financial benefits such as equity and tax deductions. With some planning and discipline, you can save enough to afford the home of your dreams. In this video, I will show you 10 tips on how to save for your very own dream home. I have also included these 10 tips under the description below. Tip number 1. Create a budget. There is a saying that you don't know what you don't know. That's why it's important to track how much you bring in and how much goes out every single month. It's also important to know what your expected expenses are when you actually own your new home. Here are the steps to creating a budget. Start by determining your total budget for purchasing a home. Consider how much you can afford to pay each month for a mortgage payment, as well as any other expenses associated with owning a home, such as property taxes, homeowner's insurance, and maintenance costs. You may also need to factor in a down payment and closing costs. Get pre-approved for a mortgage. Before you start looking for homes, it's important to get pre-approved for a mortgage. This will give you a better idea of how much you can afford to spend on a home and will help you narrow down your search. Determine your monthly mortgage payment. Use a mortgage calculator to determine your monthly mortgage payment based on your pre-approved loan amount, interest rate, and loan term. This will help you determine how much you can afford to spend on a home. Factor in other expenses. In addition to your monthly mortgage payment, you'll need to factor in other expenses associated with owning a home, such as property taxes, homeowner's insurance, and maintenance costs. Research these costs in your area and add them to your budget. Determine your down payment and closing costs. Your down payment and closing costs will also need to be factored into your budget. These costs can vary depending on the price of the home, your loan type, and other factors. Consult with a lender or a real estate agent to get an estimate of these costs. Create a contingency fund. Finally, it's a good idea to create a contingency fund to cover unexpected expenses that may arise after you purchase your home. This fund should be separate from your regular savings and should be easily accessible in case of emergencies. The amount you need to save to buy a house depends on several factors, including the price of the house, the size of your down payment, and the cost of closing and moving expenses. Here are some general guidelines to consider. Tip number 2. Set a savings goal. The formula for saving to buy a house can vary depending on individual circumstances, but a general guideline is to save at least 20% of the home's purchase price to make a down payment. Here's a formula you could use to estimate how much you need to save. Determine the purchase price of the home you want to buy. Multiply the purchase price by 0.2 or 20% to calculate the down payment amount. Add any additional costs associated with the purchase, such as closing costs or fees. Subtract any existing savings or assets you plan to use towards the purchase. Divide the remaining amount by the number of months until you plan to purchase the home to determine how much you need to save each month. For example, let's say you want to buy a home that costs $300,000 and you plan to purchase it in 2 years. Here's how the formula could look. Purchase price, $300,000. Down payment amount, $300,000 times 0.2 equals $60,000. Additional costs, $10,000. Existing savings, $20,000. Monthly savings goal, $60,000 plus $10,000 minus $20,000. Divided by 24 equals $1,666.67 per month. Keep in mind that this is just a rough estimate, and your actual savings goal may be higher or lower depending on your individual circumstances. It's also important to factor in other expenses associated with owning a home, such as property taxes, insurance, and maintenance costs, when creating a budget and savings plan. Closing costs. In addition to the down payment, you'll need to budget for closing costs. These are fees charged by your lender and other parties involved in the home buying process. Closing costs typically range from 2% to 5% of the purchase price. For example, on a $300,000 home, you could expect to pay between $6,000 and $15,000 in closing costs. Moving expenses. Finally, you'll need to consider the cost of moving expenses, such as hiring a moving company or renting a moving truck. These costs can vary widely depending on how much stuff you have and how far you're moving. Overall, to determine how much you need to save to buy a house, you'll need to add up the down payment, closing costs, and moving expenses. It's also important to factor in other expenses, such as home insurance and property taxes, which will add to your ongoing housing costs. Tip number 3. Cut down on unnecessary expenses. Cutting down on unnecessary expenses can be a great way to save money and improve your financial situation. Here are some tips to help you reduce your expenses. Create a budget. Start by tracking your expenses and creating a budget. This will help you identify areas where you are overspending and where you can cut back. Prioritize your expenses. Identify the essential expenses, such as rent, food, and utilities, and prioritize them over non-essential expenses. Cut back on subscriptions and memberships. Evaluate the subscriptions and memberships you have and cancel the ones that you don't use or need. Reduce your dining out expenses. Try to cook at home instead of eating out. You can also reduce the frequency of eating out and choose more affordable restaurants. Reduce your entertainment expenses. Look for free or low-cost entertainment options such as visiting a park, taking a hike, or having a game night with friends at home. Avoid impulse purchases. Make a shopping list before going to the store and stick to it. Avoid making impulse purchases or buying things you don't need. Shop around for better deals. Compare prices and shop around for deals before making any big purchases. This can help you save a lot of money in the long run. By implementing these tips, you can cut down on unnecessary expenses and start saving more money. Remember, small changes can add up over time, so be consistent and persistent in your efforts to reduce your expenses. Tip number 4. Increase your income. There are several ways to increase your income, including ask for a raise. If you're employed, ask your employer for a salary increase. This may require demonstrating your value to the company and showcasing your accomplishments. Freelancing. If you have skills that can be applied to freelancing, consider offering your services to clients. You can set your own rates and work on your own terms. Side hustles. Consider taking on a part-time job or starting a small business on the side. This can include selling products online, offering consulting services, or doing odd jobs for people in your community. Invest. Investing your money can provide you with additional income streams. Consider investing in stocks, bonds, mutual funds, or real estate. Learn a new skill. Learning a new skill or improving upon an existing one can help you increase your earning potential. This may require taking courses or attending workshops to improve your knowledge and expertise. Negotiate your contracts. If you're a freelancer or self-employed, negotiate your contracts to ensure you're getting paid fairly for your work. Rent out property. If you own property, consider renting it out to generate extra income. Network. Networking with other professionals in your field can lead to new opportunities and higher-paying gigs. Remember, increasing your income may require effort and dedication, but the rewards can be significant. Tip number 5. Automate your savings. Automating your savings is an effective way to ensure that you consistently save money without having to think about it every month. Here are some steps to help you automate your savings. Set up automatic transfers. Most banks allow you to set up automatic transfers from your checking account to your savings account. You can set the transfer frequency, amount, and the date when you want the transfer to take place. Choose a date that coincides with your payday or the day after to ensure you always have funds to transfer. Choose a specific amount. Determine how much money you want to save each month and set up the automatic transfer accordingly. Make sure to select an amount that is achievable but also stretches your savings goal. Use apps. There are many apps available that can help you automate your savings. Apps like Acorns, Digit, and Capital can help you save by rounding up your purchases or automatically transferring money to a savings account. These apps can also help you track your progress towards your savings goals. Save before spending. If you want to save a specific percentage of your income each month, set up the automatic transfer to happen before you have a chance to spend the money. That way, you won't be tempted to spend more than you can afford. By automating your savings, you can ensure that you consistently save money without having to worry about it each month. It's a great way to achieve your savings goals and build your wealth over time. Before I go into the rest of the tips, if you haven't already done so, please make sure to subscribe to my channel now to show your support. It is greatly appreciated. Tip number 6. Use cashback apps. Using cashback apps like Rakuten or Honey is a great way to earn money back on your purchases and put it towards your house savings. These apps work by partnering with retailers to offer cashback rewards to customers who make purchases through their platform. When you make a purchase through one of these apps, you'll earn a percentage of your total purchase price back in the form of cashback. This cashback can then be used towards your house savings, helping you reach your goal of buying a home faster. To make the most of these apps, it's important to shop through them regularly and take advantage of their offers. You can also stack these cashback rewards with other saving strategies, like using coupons or shopping during sales. It's worth noting that while using cashback apps can help you save money towards your house savings, it's still important to budget carefully and make sure you're saving enough each month to reach your goal. Tip number 7. Reduce your debt. Reducing your debt can be challenging, but it is essential for achieving financial stability and reducing stress. Here are some ways to reduce your debt. Make a budget. Start by making a budget to see how much money you have coming in and going out each month. This will help you identify areas where you can cut back on spending and redirect that money towards paying off debt. Prioritize debt payments. Make a list of all your debts, including the interest rates and minimum payments. Focus on paying off the debt with the highest interest rate first, as this will save you the most money in the long run. Consider debt consolidation. If you have multiple debts with high interest rates, consider consolidating them into a single loan with a lower interest rate. This can help you save money on interest and make it easier to manage your payments. Negotiate with creditors. If you're struggling to make payments, consider negotiating with your creditors to see if you can lower your interest rate or negotiate a payment plan that works for you. Increase your income. Look for ways to increase your income, such as taking on a part-time job or freelancing. Use the extra money to pay off your debt more quickly. Avoid taking on new debt. While you're working to pay off your debt, avoid taking on new debt. This will only make it harder to get out of debt in the long run. Remember that reducing your debt takes time and effort, but it is worth it for the peace of mind and financial stability it can bring. Tip number 8. Use savings account with high rate of interest. Using a savings account with a high rate of interest is a smart financial decision because it allows you to earn more money on your savings over time. Here are some benefits of using a high-interest savings account. Higher returns. A high-interest savings account offers a better return on your savings than a traditional savings account. This means that you can earn more interest on the money you save over time. Easy access to funds. Unlike other types of investments, a high-interest savings account offers easy access to your funds. You can withdraw your money at any time without any penalties or fees. Low risk. A high-interest savings account is a low-risk investment option because it is insured by the Federal Deposit Insurance Corporation, FDIC, up to a certain amount. This means that your money is protected even if the bank fails. Flexibility. You can open a high-interest savings account with most banks and credit unions. You can choose the one that offers the best interest rate and other features that fit your financial needs. No fees. Many high-interest savings accounts do not charge monthly maintenance fees or other account fees. This means that you can keep more of your money in your account to earn interest. There are a few ways to find savings accounts with high interest rates. Research online. Many banks and credit unions offer high-interest savings accounts, and you can research them online to compare interest rates and features. You can also use financial comparison websites to help you find the best rates. Ask your current bank. If you already have a relationship with a bank or credit union, ask them about their high-interest savings account options. They may offer a competitive rate to keep your business. Check with online banks. Online banks often offer higher interest rates on savings accounts because they have lower overhead costs than traditional brick-and-mortar banks. Look for promotional rates. Some banks may offer a higher interest rate for a limited time as a promotional offer for new customers. Consider credit unions. Credit unions are nonprofit financial institutions that often offer higher interest rates on savings accounts to their members. Remember to compare the interest rates, fees, minimum balance requirements, and other features of each account before making a decision. It's also important to ensure that the bank or credit union you choose is FDIC insured or NCUA insured for added protection of your funds. Tip number 9. Use a credit card with rewards. Using a credit card with rewards can be a great way to earn points, miles, or cash back on your purchases. Here are some tips on how to use a credit card with rewards. Choose the right card. Look for a card that offers rewards that suit your lifestyle and spending habits. For example, if you travel frequently, a card that offers airline miles or hotel rewards may be a good choice. Pay your balance in full. To avoid interest charges, make sure you pay your credit card bill in full every month. This will also help you avoid debt and keep your credit score in good shape. Maximize your rewards. Use your credit card for purchases you would make anyway, such as groceries, gas, and bills. Some credit cards also offer bonus rewards for certain categories or merchants, so be sure to take advantage of those offers. Monitor your account. Keep track of your rewards balance and any special offers or promotions from the credit card company. Some rewards expire or have blackout dates, so it's important to stay on top of your rewards and use them before they expire. Avoid unnecessary spending. Don't overspend just to earn rewards. Stick to your budget and only use your credit card for purchases you would make anyway. Overall, using a credit card with rewards can be a great way to earn some extra benefits for your everyday purchases, but it's important to use it responsibly and pay your bill in full every month to avoid interest charges and debt. The Costco Visa Card is a credit card that is issued by Citibank and is exclusively available to Costco members. It offers a variety of rewards and benefits, including cashback rewards. The Costco Visa Card offers cashback rewards on eligible purchases made with the card. These rewards are given in the form of an annual reward certificate that can be redeemed for cash or merchandise at any Costco warehouse. Gas rewards. Cardholders can earn cashback rewards on gasoline purchases made at Costco and other eligible gas stations. The cashback rewards are limited to a certain amount per year. Travel benefits. The Costco Visa Card offers travel benefits such as travel accident insurance, worldwide travel accident insurance, and baggage delay insurance. Extended warranty. The card also offers an extended warranty on purchases made with the card, which can provide extra protection beyond the manufacturer's warranty. No foreign transaction fees. Cardholders can use their Costco Visa Card for purchases outside the U.S. without incurring foreign transaction fees. Purchase protection. The card offers purchase protection, which can provide coverage if an item purchased with the card is damaged or stolen within a certain time period. To maximize the benefits of the Costco Visa Card, it is important to use it for purchases at Costco and to pay the balance in full each month to avoid interest charges. Cardholders can also monitor their rewards balance and take advantage of special offers and promotions to earn additional rewards. The amount of cash back that Costco Visa cardholders can earn depends on the type of purchase they make. Here's a breakdown of the cash back rewards offered by the Costco Visa Card. 4% cash back on eligible gas purchases, up to $7,000 per year, then 1% thereafter. 3% cash back on eligible restaurant and travel purchases. 2% cash back on all other purchases from Costco and Costco.com. 1% cash back on all other purchases made with the card. The cashback rewards are given in the form of an annual reward certificate that can be redeemed for cash or merchandise at any Costco warehouse. It's important to note that the cashback rewards can only be redeemed once a year, and any rewards not redeemed by the expiration date will be forfeited. To maximize the cashback rewards, you should use the card for all eligible purchases and pay the balance in full each month to avoid interest charges. They should also monitor their rewards balance and redeem the rewards before they expire. Tip number 10. Shop around for the best deals for anything that you buy. It's a good practice to compare prices before making a purchase, whether you're buying groceries, household items, or bigger ticket items like electronics or appliances. Here are some tips to help you compare prices and get the best deal. Do your research. Start by researching the item you want to buy online to get an idea of the average price. Look for reviews, product features, and specifications to ensure you're comparing apples to apples. Check multiple retailers. Don't limit yourself to just one retailer. Check multiple websites and physical stores to see if the item is available at a lower price elsewhere. Look for sales and discounts. Check for sales and discounts, including coupons and promo codes that may be available from the retailer or from third-party websites. Consider shipping and other fees. When comparing prices, be sure to factor in any shipping or handling fees that may be charged by the retailer. Some retailers may offer free shipping, while others may charge a flat rate or a percentage of the total purchase price. Read the fine print. Make sure you read the fine print, including return policies, warranties, and any other terms and conditions that may apply to your purchase. Don't forget about quality. While price is important, don't forget about quality. Sometimes a higher-priced item may be of better quality and offer more value in the long run. By comparing prices and doing your research, you can save money and make more informed purchasing decisions. In conclusion, owning a home is a significant financial goal that can provide stability, independence, and pride. It's also a long-term investment that can offer potential financial benefits. However, buying a home requires careful planning and discipline to save enough money. The video mentioned 10 tips on how to save for your dream home, which can help you achieve your homeownership goals. By implementing these tips and staying committed to your goal, you can turn your dream of owning a home into a reality. I hope you enjoyed watching this video. Keep in mind, the key to your financial independence is to first learn the basics of finance and then build upon that knowledge. Learning about finance is a marathon and not a sprint. As you build on top of each knowledge learned over time, you will eventually reach the wealth mountaintop. If you haven't already done so, please subscribe to my channel, click the like button, and hit the bell for notifications. See you all very soon.